Hey, how is everyone doing? It's Joel here again, Trading Group 101. So we today are going to be taking a look into Vodafone stock. It's something that one of my followers has requested overnight, so I want to take a look into this, and we will get into some analysis, some price action analysis into where things are at the moment for Vodafone, and ultimately what targets that we might have in mind if we've got a buying or a selling bias, that type of thing. So we'll see where things end up. Right. So first of all, let's have a look on our monthly time frame, and yeah, definitely a decent amount of data trading for quite some time, so we can use this quite well. Now, can we have a look on the 3 monthly, on the quarterly chart? So yeah, we'll start there and work our way down. And simply what I do on the quarterly basis, I'm not setting out my time scales here. I'm just looking at the key levels as they jump out to me on the chart. Okay, and just kind of mark those out. The all-time low there, the all-time high close. We've got this one here, and then we've also got like this this nice level there as well. Should I put this one in here? Yeah, because that's acted as a level of resistance and support before it's broken through. So other than that, probably not anything else that I need to put in there. So that's worked out pretty well. And then I'll move down to my monthly time scale, see what we can do on this chart. Let's have a look. It's quite clear already that we are at some sort of a level of support that's previously held. You can see that quite clearly. We've tapped back into this exact level, and that's catapulted a huge run up to 240 a share. So let's kind of have a look at what kind of percentage wise we're looking at there. Over 160% profit. Obviously, quite a significant amount of hold time to hold on to the stock to realize that, but still very significant. A big bounce off this level again, and this is now the third time that we're visiting this level since 2008. So we'll see exactly how price reacts at this time. We've still got a good number of days, about halfway through the month, exactly halfway through the month. And as things currently stand with the candle, we can't read too much into it because things could drastically change in 15 days worth of trading. But it looks like it's bearish engulfing just at this moment in time, split between bearish engulfing on the body, a doji candle. So it's showing a little bit of indecision as we already have got it right now. So we'll just kind of keep an eye on that as it stands. Is there anything else that we can kind of put in it on this? Probably not going to add anything onto this level because I don't think there's really any need to. I think kind of the key levels from that quarterly basis are getting nicely mapped out. Now, what I am going to do is drop down to the weekly. I'm going to start mapping out my yearly highs and lows. So let's just start doing that. Just bear in mind while I just kind of separate these. Anybody familiar with my analysis technique will be aware of how this generally goes. But we just kind of and if you haven't, or if you're not familiar with my analysis technique, so what we do is take these levels from highs and lows and we mark them out vertically. Trading should always be done both on the horizontal axis, on the price axis, but also on the time basis, because price movements are relevant to time as well as price. Okay, so yearly highs, monthly highs, these type of things, they're all very relevant. Daily highs and lows, all this type of thing. So go to the horizontal ray tool again, and we'll kind of work our way from this side. So I don't need to pop in the high or the low there because that's already been done for that year, and also the same range was been trading into there. So the high, definitely the low there, very relevant. And then again, the low and the high for this. What I'm going to do is change this color because it'll make it a lot easier. Make sure that's the same color. And we also got this low in from this year. High for this year is already in. The low there, do we need that in there? Certainly is going to be relevant. And that's where we are at the moment. Going back there, I could probably go back a little bit further. I'll start mapping out some of these levels back here. Just bear with me while we go through this. Let's say this process, usually you can analyze a stock from top to bottom very quickly. So I'll give us that needs to be just adjusted a little bit. And so does that one. Don't need to be deadly precise on these, but it is just nice to get them as close as we can. So we then map out the high there is already in, the low exactly where it is at current trading price. High there, low there. Highs probably already marked out for that year. We'll mark that in again. And this is why it's so important to map out the highs and lows for these levels and for both time and price, because you can already see if we were trading back in 2011, we mapped out that low for the year. As we go into 2012, it already acts, or 2012, 2013, it acts as that level of support. So we'd be watching that key level, bounces off, and we know that this is a great trading opportunity. The highs here already marked out, so we don't need to kind of do anything more than that for now. And it is interesting to see, like, that level that we mapped out here, both of these levels acted as key levels of support and resistance when we came back into them years later. So all very relevant, and even these levels that we're marking out here over the last few years are going to be relevant again in the future. So this is the way that you maintain your charts, and that you always keep on top of your analysis, and it pays dividends massively when it comes back into so I can take that one off because we've already got this level coming in there, you see. So these types of things, they act so much of a key resistance levels and support levels that it's just simply worth spending the time and making sure that we map these out properly, because ultimately your profitability will rely on it. Let's see, I can just keep tidying these up. Each time we change a time zone, change the time frame, we always change this as well. Just kind of get rid of the color that. Using my horizontal ray tool again, we'll drop down to the dailies. So what we want to now do on the dailies is we want to map out the quarterlies, okay? The highs and low of the quarterly levels. Again, they are relevant. That's the reason why we do this. Oh, I'm using the wrong bloody tool, sorry. We are it turns out we are all human, so apologies for that. We'll go back, start again, try again, second time lucky. And just map out all of these quarterly levels. Don't need to go back to the start of history, but it's up to you. Further you go back, the more relevant they will be. So, certainly is an advantage to it, but it's entirely personal preference. And all I'm doing again, same within these time zones that I've mapped out. This is the quarterly levels, and I'm just doing highs and lows for the quarterly levels now, seeing whether or not they, how they map out. So I've got the high there for this year, or for this quarter, sorry. The low for this quarter already comes in again from the previous one. You get the idea. This low is already in there. The high there is very close to this one. I will just pop it in. The high is already in there for that one. The low's in there for that. The low and the high are already in for this quarter. This one's already in. This one's very close to this one up here as well. So I don't need to put in. That one's already in. This one's already in. These look like they're already in as well, so don't need to kind of map those out. And very quickly, you can see that we have now got a lot of context to our chart. We've got a lot of key levels that are mapped out on here. It's going to start making some key trading decisions for us as this trade develops, and we can kind of then now start mapping out what's going to be relevant to us, what's going to be important to us, and go from there. So, like, as I say, already we're getting this all of this context. As I say, we've got the higher time frame levels as we go back. They stretch out because they're the higher time frames that we need to go, and then as things get closer to the relevant time that we're actually making trading decisions, we can actually make those a lot closer, so we can actually analyze them a little bit further. So now what we need to do is tidy this up a little bit, because obviously trading our charts, we want clean decisions, we want clear decisions in our trading decisions. So like wherever I see a trading level has been traded through a few times without it acting as a significant level of support or resistance, I can just delete that level, because it's not as relevant anymore for us. So that's what I look to do. Now, as I say, I can pick between this one or this one that I'm going to start. I'm going to take this one out and leave the other couple in there. So this is acted as a good level of support. Good level of support. It came very close, and you could see those act like a near support, not bang on touches. These are acting levels of resistance. This one here, though, recently hasn't acted as too much of a level of support or resistance. So kind of get rid of that one, and it then starts tidying it up a little bit more for us. So finally, what I'm then going to do, just tidy up one more little level further. I'm just going to kind of put our box tool on here, and that's going to then tidy up those two levels. Instead of it having two levels close together, I'm going to make that into a zone, because I know price could move into either one of those. Just because price goes above that one a little bit, it doesn't invalidate it until it goes above beyond this zone. So that's why I'm just mapping that out there as a zone. And yeah, I'm probably going to leave it as it is there, because that's pretty nice. Probably, again, what I could do is make this a zone as well, just because I've got two levels quite close to each other. Tidy it up a little bit further. So it's all about this, just making sure you've got nice, clean trading decisions as you come into your markets. So straight away, I think that's probably enough for me to start making some trading decisions there. I could go one step lower from this daily and start kind of going down into, say, the 15-minute, and then mapping out the weekly highs and lows. Certainly is relevant, and by all means you can start making those trading decisions based upon that. You know what, we certainly can do that. Let's just do that for now. It's what probably you should do. We go back too far, and we'll just kind of map out these levels, just these weekly highs and lows again, just so we can get some context through this trading zone that we've got here. And we're just going to map those out with a red tool. Bless me. Apologies. So yeah, I mean that's given me a little bit more perspective in our current low for this week as well. So we'll just go and take those off, and now I can start making some decisions about what I want to do with this market. And what can we do? So, as it quite clearly goes to see what we've got here on the 15-minute time frame now, looks like we've already made a big rejection here of this level. Market's gone through that and traded right back below, been snapped back below that market level. So that's certainly something to pay attention to, and it probably dictates that the market's going to retest this low again, this 94. Because we know that purple level's from a significant level before, and also let's just kind of see if it's as well. Yeah, as expected, it is. If I mark out this this sell-off that we saw throughout yesterday, this has retested both a market level that was previously mapped onto the chart as a key level, but it's also added confluence because it's a 38.2 Fibonacci retracement. So two confluences tells me that probably throughout the rest of the day we may look to test this 94, 90, 95, 94.6 region and just make a trading decision once we get back down into that, whether or not it's going to be another low. Now, where do things go if we do test that 94.6 level and we were to by any chance fail? Oh, dear me, get rid of the Fibonacci. Is this 82 region is probably going to be the next level to be targeted. But that, to be said, needs to be a big decision point around this 97.82 level here, just below where we've just traded to, because you can see previously markets have closed above that level. So are we going all the way back down to this low? Will the market trade back above here by the end of the day? Important to be aware. So let's just kind of wait and see for the end of the day. But I think certainly by the end, I think it looks like an intraday trading decision. If I was to be making an intraday trade, just a short kind of scalping trade almost for the rest of the day, I would be looking at stops above this level, this 99 level. I would then be looking into, where did we have our Fibonacci? Or actually not even that. I would actually look at, there's relevance in taking that down and trying to target that level, because there's a good possibility that we would hit that region. So, I mean, you've got a nice risk to reward of 4.8 to 1 there by just taking those key levels that we've mapped out and seeing whether or not the market would hit that level. As I say, it's asking a little bit that you're going to make a new low. You're not kind of seeing the market trading from one level to the next, as it were. But I do think that there's a significant amount of bearish interest there. Just with the big sell-off already, it's kind of showing a bit of a hand from the market already, because we were in a bit of a range. We've dropped significantly. Looks like lots and lots of volumes come into the market because these are small volume candles and then instantly big candle volume movements. So there's lots of volatility. We've then amongst that shown a rejection of a key level that's already mapped out, and it's a Fibonacci level. So that's probably going to be my best trade on this market right now. But let me know in the comments what your thoughts are as well, and we'll get a few decisions and a few opinions on where things might be headed next.